We are going to go ahead and get started. For today's webinar topic, we're going to be talking about our item mapping. This is going to refer to our product and our services list, or sometimes we have our clients even call them billing codes. So we are going to be looking at what that item setup looks like in QuickBooks and why it's important. With that, let's go ahead and jump right into our topic, which again is going to be item mapping and why it's important. So the first thing I want to talk about is, what does it mean when we say we are mapping our items, and what are the variety of ways we can categorize or code our items list to help get the information that we want. One of the first things that we typically think of when we're talking about account mapping or item mapping is making sure that the accounts from our chart of accounts are assigned properly to our items list. What that means is, if I come here to our QuickBooks system and I look at our item list, we can identify what accounts are assigned to our item list so that when we use our item on a sales or purchase transaction, we know the accounts we would expect to see a balance in when we're looking at our profit and loss or balance sheet. I can come in here and I can go ahead and open up this item by double clicking on it. And you'll notice here for our inventory part, we've got 3 different areas we can map an account to. We've got our COGS account, or cost of goods sold. That is going to be used for the expense side when purchasing our item or materials. The next one is our income or revenue field, which again is going to be used on our sales transactions when we're entering customer invoices to account for those engagements. And then the last area down here is going to be our asset account. This is going to track the material value of our inventory parts. Now, some of the other things that we can look at when we're talking about any kind of mapping or coding on an item are also parent and sub items. What I mean by that is, if I come back here to our QuickBooks file, you'll notice here that when we look at the item itself, it has 2 names. So we've got pumps followed by a colon and then the item name. This pumps or precursor item is known as the parent item, and then the actual item name is what follows the colon. We usually see a similar structure set up when we're looking at accounts on our chart of accounts, most often in that expense area. What this allows us to do is categorize or group our items. Most commonly, our clients will use either different product streams or revenue streams as these parent items to help group or bundle certain items on their item list together. What this allows you to see is basically the expand or collapsed view of our items when looking at a report. So for example, if I want to look at my sales history for my items, I can look at my sales by item summary report. And you'll notice here that every time we've got any kind of parent account or item set up, it's noted here in this gray row, and then underneath it, we've got our actual items. So as you can see here in this example, I have pool covers set up as a parent item, and then I've got my different types of pool covers underneath. So what I can do here is, if I just want to see my overall sales for pool covers, I can go ahead and collapse this view, and now QuickBooks gives me high-level information for what my pool cover sales are. I can also then expand it like we saw in the first view, and I can actually see how each of my individual pool covers are doing to note if I need to make any kind of product changes. The last thing that we can talk about when there's any kind of item mapping or grouping involved is categories. Categories will almost act somewhat similar to the class feature, but this is specifically designated to our items list. So if I come back here to our QuickBooks file and our item list, you'll notice that when we look at the item detail, we've got this category option here. Similar to using parent and sub items, you can create categories as an alternative to group your items together. One of the nice things about categories is that you can use this as a filtering mechanism when you're running reports. For example, if I come to our inventory valuation report that shows us our overall inventory quantities and values on hand, when I customize this report, I have a list of filters I can use to modify it. And if I choose category, I can select a certain list or subset of items that I'd like to see information on. So again, when we're talking about account mapping, the main thing that we're looking at with items is how are our accounts coded to our individual items, but we also have additional ways to group or classify our items by using things like parent and sub accounts or categories. Continuing on with talking about account mapping, there's a few different things to note when we're talking about setting up items. The first thing is understanding what it means for an item to be single-sided versus double-sided. If I come in here to our QuickBooks file and back to our item list, I'm going to go ahead and right-click and choose New to create or add an item. From here, there's a box that says this service is used in assemblies or is performed by a subcontractor or partner. What this box allows us to do is see both the expense side as well as the revenue side on our items. So if I go ahead and check this, you'll notice now I've got a purchase side for information as well as a sales side. If I uncheck this, we only have one account field that we're able to assign to our item. One of the things that we tend to see happen when we don't check this box to make an item double-sided is that our clients will work to change the account field every time they need to use that item. For example, if we've got freight that we pay for to bring in our products or materials, and we charge our customers freight for those items that are being used on their order, we would want to make sure we've got that freight double-sided to hit an expense account for our cost to bring in those materials, and then a revenue account to ensure that we're recouping funds for that freight charge. Alternatively, like I said, sometimes our clients will work to just frequently update the account mapping as the item is used, and that can create bad or blurry item history. So we always want to make sure that we are checking our items to be double-sided if it's something that we are going to use both on the expense side as well as the sales side. One of the other things that we tend to see happen is sometimes we will have separate items created for each transaction type. So we'll have a freight item that we apply to our vendor bills, and then a freight item that we apply to our customer invoices. The problem that we can run into with that is if we want to see any kind of item profitability, we need to make sure we're using the same item on both sides of our transaction. So for example, if I come in here to our item profitability report, This is going to tell me the quantity sold for an item as well as the cost, and then sales price and the value sold to date. If we're using different items to account for the expenses we are paying versus what we're charging our customers, we won't be able to read or use this item profitability report because our items list is no longer one-to-one. So again, super important when we're talking about creating or setting up items inside of QuickBooks. If this is an item we're going to be using both on the expense side as well as the sales side, we want to make sure we check this box so that we can set up both sides of our item to be used properly. Now, one of the things we also want to look at is how our inventory item setup differs somewhat from our other item types inside of QuickBooks. So what exactly is unique for our inventory parts or our assemblies? I'm just going to bundle those together and say inventory as a whole because the setup for them is very similar. But what is different about setting up inventory versus a service, non-inventory, or other charge? If we come back to our QuickBooks items list here, we can go ahead and take a look. So you'll notice here, I've got service set up here as my item type. If I change this to non-inventory and again, choose that option to make the item double-sided, you can see that the setup for the item information is the same. QuickBooks provides you with a nice blurb here of when this particular item type could be used. What changes when we set up inventory is the asset tracking piece. So if I go ahead and change my transaction type to non-inventory, or excuse me, from non-inventory to an inventory part, you'll see here this inventory information down below is the piece that gets added. Whenever we are bringing in inventory, we should always have an asset value associated with those products or materials. And similarly, when we sell inventory or fulfill a customer order, that asset value is what should be relieved or removed from our balance sheet when that order is fulfilled. So this is the unique area that does change when we're looking at inventory setup versus the other item types. And again, if I am talking about an inventory assembly, that setup is going to be the same as well. The difference here is that we are also going to be adding our bill of materials for what makes up that assembled item. But the big difference to note here is that the asset account is the piece that gets added when we're doing any kind of inventory setup and tracking. One of the things that I also want to take a look at is how these accounts are hit when they're used on a transaction and what you'd expect to see when we're looking at a report like a balance sheet or a profit and loss. I'm going to go ahead and close out of here. And the first thing I want to do is take a look at our vendor bill side of things. If I am entering a vendor bill for an item, we have two instances of the accounts that will be hit. In the case of using any kind of inventory, this is where our inventory asset account comes into play, and that balance is what we would expect to see increase when we are entering a vendor bill. This states that we're bringing in an inventory quantity into our stock that we can use to fulfill customer orders. If I come up here to the reports tab, this is one of my favorite areas to look at whenever I have questions about maybe account balances that I'd expect to have a different value. I love looking at the transaction journal, which tells me what accounts exactly are hit and what the balances are that went to those accounts. If I look at the transaction journal for this vendor bill that has inventory being brought in, we can see the accounts that are being utilized. You'll notice here, I have the transaction detail and we've got this account column. One side of our vendor bill hits accounts payable, which makes sense. We are entering a vendor bill. We are buying something from our vendor. So we need to show that we have a balance due to them. The other side is going to hit our inventory asset account. In this case, that's going to be our materials inventory. Where you'll see this differ slightly is, again, if we are entering something like a service or a non-inventory item, rather than hitting inventory asset, the other side of that internal transaction journal is going to be the cost of goods sold or expense account that we have that item mapped to. So again, this is super important when we're talking about item setup, because the accounts that are assigned to our items dictate what we are going to see from a reporting standpoint on our balance sheet and profit and loss. The next example we're going to go ahead and take a look at is what the difference is that we see when we enter a customer invoice. So we've seen how the expense side is handled when we're entering a vendor bill. Now let's go ahead and look at what the revenue or sales side is. When I'm creating an invoice, I am applying the same logic here of adding my items to the order to fulfill for our customer. In this case, I'm using that same inventory part so we can see exactly what the in and the out looks like when we're using the item. If I come in here to our reports tab and back to our transaction journal, you can see we've got a little bit more detail here on the customer invoice side. So we have, again, accounts receivable being hit, just like we saw accounts payable being hit when we entered our vendor bill. But we've got some additional line items here that you'll notice. And I'm going to go ahead and expand these just to make that a little bit easier to read. So you'll notice here, in addition to accounts receivable, we've got a revenue line item that's going to recognize the sales or income for the item being sold. We've also got our materials inventory. So we saw that on the vendor bill when we brought in the quantity to stock. When we sell it, we're going to hit that same account so that we can relieve the inventory that we're using on the order. The additional line that you'll see here is going to be our cost of goods sold line. So what this is recognizing is the cost of the item based off of the purchase that was made. So this is recognizing the expense that was incurred to bring in this item that we're now using to fulfill on our customer order. The last item you see here is sales tax. This is something that would only be customer specific and may not be something that would apply to everyone. But the big thing that I want to note here is the accounts that we're hitting. So again, we've got accounts receivable or accounts payable, depending on if it's a vendor bill or customer invoice we're inputting. We've got an inventory asset account, either a debit to bring in our inventory quantity on hand, or a credit when we're relieving it and fulfilling a customer order. We've got our revenue account for our customer invoice when we're making or entering a sales transaction. And then we've also got our cost of goods sold account to account for the expense of the purchase of that item. One of the things that we also commonly see that can kind of muddy these accounts and not allow proper tracking of our items is if we've got items where the same account is used in multiple fields. What I mean by that is, for example, if I come back here to our inventory part, sometimes we will see where an income account is also posted in our cost of goods sold account field or vice versa. What that means is when we're looking at this transaction journal on our customer invoice, we're going to see the same account hit twice. So we could have two instances of revenue being offset and netting to zero, or cost of goods sold. So again, looking at this transaction journal, as well as how these account mappings feed into our balance sheet and profit and loss, is super important to ensure that we have our accounts set up correctly. When we talk about where we see these on the balance sheet and profit and loss reports, for the balance sheet, we're going to see our inventory asset information listed as an other current asset. Sometimes our clients may have multiple inventory accounts, again, possibly for different revenue or product streams, or if we do any kind of assembly work and need any kind of work in progress information. But this is where you'll see our inventory asset value represented. Alternatively, when we look at the profit and loss, you'll see our income as well as our cost of goods sold here. That's going to make up the top portion of our of our profit and loss report. So whenever we're using these items, we should be able to drill down into these balances on these financial reports and see the reflected information of our customer invoices and sales, or our vendor expenses and bills. With that, I just want to go ahead and recap what we ultimately talked about as far as what it means when we're talking through account mapping or item mapping and setup. Some of the things that we want to keep in mind are going to be the accounts that we assign our overall items. Again, for anything not inventory, we should be looking at making our items double-sided and ensuring we have both a sales and revenue account mapped to our item. For anything inventory related, we are adding in the addition of that asset value to track the value of the materials or items. We've also got the opportunity to set up parent and sub items. So what that allows us to do is group items similar to our chart of accounts, and we can use that expand collapse functionality when we're talking about our reports like sales by item, or even looking at our inventory valuation. The last thing is, again, categories. So similar functionality to our parent sub-item setup, or even similar to how we assign classes to transactions. It gives us the chance to categorize or code our items list. And this category field is an area we can use as a filter on a variety of item-related reports. The other thing that we always want to be sure of is making sure we're not creating duplicate items in the system to track our sales versus expenses. We always want to have visibility on our item profitability. So using that double-sided feature to ensure we can set up both sides of the item is super important. With that, if there are any questions that you guys can think of, please feel free to let us know. Hopefully this allows the opportunity for some of us to go in and do a review of our own item list and take a look at that mapping. One of the nice areas in QuickBooks that you can actually do that is in the Add, Edit, Multiple list. So you can come in here to your List tab and down to Add, Edit, Multiple List Entries. You have a variety of lists that QuickBooks allows you to treat somewhat like an Excel copy and paste spreadsheet, where you can make updates in mass. I can choose from this drop-down menu list, and I can look at my different item types. So I can look at things like account mapping, as well as item type setup to ensure all of that is correct. You can also run a report from your Reports tab and your List section. You can run a report for your item listing. This will default to just active items, but again, it will give you the item detail to make sure that your item setup is correct. All right, thank you guys so much for your time.